So this is Euro Pound analysis for Wednesday the 18th of October. Now, let's just have a look what's happening with these markets. So, on the 17th, yesterday, we did see prices come all the way down, and it did react to this higher time frame moving average here in black, as it reacted over here on the 16th. We also have this bit of confluence here at the 88.73. So we have posted what would be termed a double bottom at around the 88.73 level. Buyers have stepped into the market and appear to have be willing to buy the pound against the euro. We did have Mark Carney out, and he did make some comments in regards to the pound. At present, it does appear that the market is interpreted as being slightly, it's not being too dramatic actually. So, yeah, I guess the comments didn't really give the market much direction. So, he actually came out at 11 in the morning. Yeah, so let's see. 11 in the morning, bullish euro against the pound. I'm guessing the market interpreted his conference or whatever it was as being slightly bearish to the pound. We've seen the up move in the euro, and we've come up to an area where we'll likely have some resistance in around that 200, this blue line here, which is our 200 period moving average. So we appear to be forming a bit of a bull flag here. I suppose the bull flag will stay valid as long as we do maintain closes above the 20 period moving average. Currently, the 20 period moving average is sitting down at 89. Would you say 89.04? Let's just see where that is. It's around 89. We're currently trading at 89.22. It's around 89. So as long as prices stay in and around that area there, we'd still expect continuation to the upside. Above and a break above the 200 period moving average. The very next area of resistance is pretty close at 89.45, which was a weekly pivot from a couple of weeks ago now. If we do break above it, retest and a strong candle off that level, or we break above it with a bit of consolidation before another move upwards, we'll be expecting prices to go on upwards towards 90.24. Or if we go up to 89.45, we have a bit of consolidation, couple of retests, and prices start to break away from that level. We would again target 88.73 to the downside. A successful break of that, as well as this moving average here marked out in black. We would expect prices to go all the way down to 88.50. We do have the diagonal trend line down at 88.50 level. There is a bit of an intersection over here, which can be seen as well. So let's just go to the higher time frames, just see where prices are. We were in an uptrend on the monthly chart, and again that wouldn't have changed. Yep, as you can see, clear an uptrend. There's the diagonal trend line I've mentioned here in red. Of concern was the month of September being a pretty much an engulfing candle. Not much trades to the upside. Closed near its lows. In and around support. We have in the month of October pushed up to somewhere in region of probably the 50% or just about 50% retracement on the monthly chart, and we have seen some selling, but we're still trading above the month's open, so we still look poised to post a bullish month. So if I go down to the weekly time frame just to see how things are currently playing out, again we do have this large and bearish candle, which was a bit of an exhaustion candle here on the 11th of September. Since then we've had a mixture, mainly bullish momentum in the market on the weekly time frame. It's clear, the diagonal trend line is clearer here. So 90.24 seems to be an important level, as we did see prices stall in the end of last year in October, in and around that level for a couple of weeks. The 90.24 did provide some resistance. We briefly broke above it a couple of times, but we ended up closing below it. So on a weekly time frame, what are we seeing here? Well, we're still in the shadow of the pretty much bearish engulfing exhaustion candle, so we would be slightly bearish, but we use the weekly pivots as our point of reference, and we are trading above it. The current weekly pivot is sitting at 88.73, is it? Yes, 88.73, and we are trading above that, so we do maintain a bullish bias as we are trading above the weekly pivot. So on the daily chart, let's have a look. Well, we come all the way down, and we retraced 50%. I measured it on the Fibonacci, so we did retrace 50% up here when we did have this sell-off. Now we appear to have found support down at the 20 period moving average here on the daily chart. We've seen here on the 13th, no, it's on the 16th. On the 16th, we had a bullish move off the 20 period moving average, and on the 17th we went on to test it again, and there was some bullish buying momentum off it. So if we were to assume that we had this consolidation over here, as can be seen in July, and we've come down into that area again and seem to have found support along this horizontal support. We have moved up and retraced a bit and found support at the 20 period moving average. So let's assume that is our higher low. A move to the upside would be the next likely outcome. So a move to retest 90.24 would be the next likely outcome, with a trade below, say, 88.56 being invalidation of the bullish move to 90.24. So just to summarize, on the execution time frame, we would like to see a successful navigation of, we would like to successfully navigate the 200 period that we target, the 89.45, above which, if we do continue to see bullish price momentum, we'll be looking for a move up to 90.24. If we do break down from this 200 period here, I suppose the bull flag would become invalidated as soon as we pretty much trade below 89. We'll be looking to target 88.73 on the downside, 88.51, and below that 88.20 would come into focus. Below even that, we'll be looking at 87.83. But over the 18th, I can't see prices trading much below 88.20. Definitely, I wouldn't expect prices to get all the way down to 87.83. But it's important to look at these levels on the charts as reference points. So that should wrap up the Euro Pound analysis. So before I go, LCS, like, comment, subscribe. Thanks for watching.